Hi, this is Dustin with Dustin's Dollars. Today I'm going to be going over Knightscope's 2022 Q2 quarterly earnings report that was just released today. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. All right, so real quick, the overall takeaways, and I'm going to go into slightly more detail. Revenue was up slightly. Sales backlog is up. Gross margins are about the same, which is to say that they're still horrible. And operating expenses were up. And, overall, I was a little disappointed with this report. So let me go into each of these items and talk about it. So revenue for the quarter. This is I stuck it into a graph here. If we're just looking at the raw numbers, the revenue for this quarter was a bit over $1 million, $1,042,000. Quarter over quarter, or looking at the graph and the trend of what this looks like. This is it right here. You can see this is the quarterly revenue numbers for the past 2 years or so. Slightly more than 2 years. There is this uptick in this past couple quarters. You can see that they were flat for a while, and then they hit down to this point right here in the middle of 2021, let's say, or near the end of 2021, and then it looks like things have been going up since then. They've been up roughly, rough numbers, about 10% quarter over quarter. For the past 3 quarters, there is a slope upwards there, and this was forming a trend. It still is going in that direction, but it's 10% quarter over quarter is actually pretty small for the company at their current size. So honestly, I was a little disappointed to only see their revenue up roughly 10% for this quarter. Technically it was 10.38% per my numbers here. I expected more given what we have seen in the past regarding their, and I'm going to go into this in a second, the amount of robots that they have produced. But, growth is growth, at least. On that sort of a similar front, they did report their current sales backlog as of August, right? This is not as of the quarter end. This is as of August 10th. Is higher. It is the highest I believe that it's been ever. It was $1.9 million worth of revenue in the backlog. They said that was 35 robots. You can see that right here in the filing. They, as of August 10th, 2022, the company has a backlog of orders to deploy 35 ASRs, representing an aggregate annual subscription value of approximately $1.9 million. So, it's a little frustrating that they have this backlog of orders. I'm sure it's frustrating for the company as well. Just let me throw that out there. But as investors see a backlog that's $1.9 million when they're only generating about $1 million per quarter in revenue right now, right? So that's, if they deployed all these robots and they were recognizing revenue from those robots, that would be almost a 50% increase in their revenue, just right there. So that at least, assuming that they can get through some of these, that'll obviously be a big boost to the company. And that's actually part of my thesis, is I thought they were going to get through more of the prior backlog, right? They had actually disclosed near the end of March they had a $1.7 million backlog, in May $1.6 million backlog, and I was really hoping that we would see a good chunk of that get deployed throughout May and June, and that we could start to see some of that actually be reflected in their revenue figures, where if they had deployed, let's say, half of that backlog, that would be another $200,000 in revenue per quarter, right? $800,000 for the year. And so I was maybe too optimistic, in these times of supply chain constraints that they've been very, very public about calling out. But maybe that I was optimistic that would have driven much higher than 10% revenue growth for the quarter. But at least it is good to see that Now what we are seeing is revenue is growing and sales backlog seems to be growing, which is better than what we saw, a year or two ago, where the whole thing was roughly flat and it seemed to be largely driven by customer cancellation. So that does not seem to be the case anymore. So that's actually really good. All right, moving along in what I wanted to go through today. The gross margins are still horrible. Despite the revenue of $1.04 million, their cost of revenue for the 3 months for the quarter was 1.7, and so that is actually up. And I have a chart, I believe, of their gross margins on each quarter, and this is it. And you can see, it's not their worst quarter, but we're back down in this, negative 66%, I think it was, gross margins, which is obviously awful. Again, I do expect that we'll start to see what these actually look like when the company grows, right? When revenue doubles or triples, it will be super interesting to see, what these margins look like. I expect them to improve, just with scale. And I also, Wakaza, boom, here, aloha, Dustin. Hi, Wakaza, thanks for hopping on the stream. But I expect those margins to improve as the company does scale. I expect it to also improve as they start to phase in this 5th generation K5 that they talked about, that's going to reduce their cost to produce. Hi, I'm Random Liloco. Thanks for joining. Let me know what y'all think, or are thinking about, what you think about the quarterly earnings that were just released today. That's what I'm going over here. And again, I've covered this in the past, that their gross margins are obviously bad now, but I do think they're going to improve over time. It would have been nice to see it improve just a tiny bit, given that their revenue was up for this quarter. But again, I'm not reading too much into it. If the revenue doubles and they're at $2 million a quarter, and the margins are still at negative 66%, then I'm going to start to get worried. And especially if they've deployed their new their 5th generation K5, which they've said they're going to deploy by the end of this year. That's when I personally will start to get worried that maybe the numbers aren't actually working out. One other thing that I forgot to mention, I was talking about the sales backlog. I think we can pretty well say at this point that they've actually dropped the price of their robots. This is because so they stopped reporting the number of robots on their actual 10Qs and their 10Ks on their quarterly reports they have in network. They used to report this every time. They used to say we have 57 robots in network, and they don't do that anymore. So we can't actually tell precisely how many robots they have deployed. However, they do report those number of robots and the size of the sales backlog in terms of revenue in when they are talking about this 35 ASRs for a value of $1.9 million. And because practically all of their sales seem to be K5s, I'm at least just making that simplifying assumption right now, the revenue per robot would be strongly skewed towards whatever the revenue is for the K5. And these past numbers that we've seen since September of 2021 all the way through to the report today that represents in August. I did the division here. Maybe that's too small for you to see, but I could zoom in just a moment. So hopefully those are legible. There you go. If you divide that out, forgetting about this number that was reported in April of 2021, that was quite a while ago, the revenue per robot is hovering around this $55,000 range. And so I think I am surmising or inferring from this that they've actually lowered their prices on their robots. And they weren't public about this, and so I could be wrong, but previously we've seen numbers that were higher than the 50s, numbers in the 60s, and I think they used to report like the $80,000 range for the K5s, and it looks like they've lowered their cost for that. And that is my theory. Again, this is my basis for that theory. And looking at this, going back here, I think that's part of why we saw the revenue just not grow as much as I expected, given the number of robots that they said they had deployed. And So that is just one thing that's I'm going to be keeping my eyes on in the future. Um, maybe that's actually a positive for gaining market share and getting new clients at the current moment. And maybe they'll have the opportunity to raise prices in the future, if they have a strong client base and are able to show value there. I don't know. Just something that I noticed that sort of made me update some other models that I have in terms of that are based on number of robots. All right, couple other things to go through here. Operating expenses, those also were actually up more than I expected. Research and development, that's growing. They're hiring engineers. That makes sense. It's the G&A that actually was a lot higher, and I have the numbers here. I think I have a nice graph that shows a separate line for each one of these. And so the G&A is this red line here, and you can see this actually, I expected it to go up by the end of Q1, as it did, and so it was in the $2.3 million range. Yeah, there you go, $2.326 million in Q1, but then it was even higher in Q2, and it went up by another, I don't know, what's that, 20% or so, almost to $3 million. And they cite the increased cost of basically being a public company, having to file a bunch of stuff and be in compliance with all the regulations. But I thought that they had already gotten to that point in Q1. So that was an unhappy surprise to see. I'm hoping that the number doesn't grow further. That sort of caps off here now that they are a properly set up to be a public company. Anyways, sales and marketing was down, and this is something I've talked about in the past, where they, in the, I think they called it out here that it was largely due to advertising, right? Yeah, so there was a decrease of $2 million in commercial advertising expenses for the quarter, and this is what I've talked about in the past, where that number was artificial inflated. They were running a bunch of ads, doing a bunch of advertising because they wanted to raise awareness for the company, and again, partially that was because they wanted to get investor interest, in my opinion. And I think they're no longer doing that, and so they're at least not burning through all that cash. They're putting the money into G&A and also R&D, right? And you can see the R&D has just steadily grown and grown and grown, and I do expect that probably to continue for some period of time. They do have to invest and make the robots better. Is this Q2? Well, Causa asks, is this Q2 earnings or hypothetical? These are actual numbers right here. Yeah, this I assume you're talking about these operating expenses, right? These are they're actual in Q2. I can flip back over here to the income statement. 3 months ended June 30th. R&D was just a tad over $2 million. Sales and marketing was $1.5 million, and the G&A was almost $3 million. That's what this G&A number here is what I'm talking about. That was higher than I expected. And if I pull over their, I can show you their prior quarter numbers, where the G&A was, just to validate that I've got it right. So these numbers I just copied in a spreadsheet because it's easier for me to manipulate and take a look at there. Looking at their prior quarter, G&A was $2.3 million for the quarter, and so the fact that it's now up to 2.9 that was a big jump that I was not expecting. So that's what I meant from there. All right, a couple other smaller things just to note. I covered this in the past, so they did have this equity funding thing, this stock purchase agreement, I think maybe is the right term for it, with B. Riley, and they did actually sell some of those shares for approximately $3.95 per share, if I did my math correctly. You can see they talk about it, sold precisely 95,734 shares during Q2 they sold those to B. Riley, and they got about $400,000. I think further up, if you look in the cash flow statement, you can see this actually like $378,000. That's why I jotted down on my notes here, which you do the math, it comes out to about $3.95 per share. And if you're looking at the graph here, I was taking a look over here at the past 6 months. that means that they either did this, earlier on in the quarter, or they did it during this spike here in June. So it's hard to say. I was a little surprised that they were already tapping into that, given that they have a lot of cash on hand, and given that I personally am optimistic that we're going to see a good Q3. I mean, I thought Q2 was going to be better, but that we're going to see a good Q3, and that we're going to have the catalyst when they announce, assuming that they get through it, that they're going to announce, FedRAMP compliance. And I expect the stock to, react just like it did when they said they were in progress. I can't remember which of these particular spikes it was, somewhere along the way. I just don't remember when that was, but I remember it gave a good spike up in the stock, and if I were the company, that's when I would be selling some stock, right? Just trying to time those tops. Anyways, one interesting thing, because 13Fs were also reported in the past week, we did actually see that B. Riley is holding on to some of those shares, right? So they bought was it 95,000 from the company, and they're still holding at the end of the quarter. They were still holding about 25,000. So they sold about 2/3, maybe 3/4 of the stock that they bought, and so that's what we should really expect to see happen in the future, when Knightscope does invoke that stock purchase thing. All right, just a couple other minor notes. I did see, speaking of sort of folks selling and putting downward pressure on the stock price, I did see there was a lot of conversions of almost 2 million Class A shares worth of conversions. Let me find the right place here. Here we go. Almost 2 million shares. Maybe that's too small, but 1.958 million shares of Class A stock were issued to folks who were converting some of their preferred stock, and just a handful of the Class B stock into commons, right? And the only reason why I think anybody would be converting their preferred stock into common stock is to sell it, right? Because I think anybody who's holding the preferred stock has the sort of has better liquidation preferences just in case something happens with the company, and they always have the option to convert. There's no limitations on those as far as I know. And so anybody who is holding the preferred stock, I would expect them just to hold it if they want to continue holding the stock, but if they want to sell, they have to convert to Class A's first. So that's 2 million shares in the quarter that were created through conversions, and my personal assumption would be that almost all of those 2 million shares, or 1.9 if you will, were actually sold, because otherwise I'm not sure why they'd be converting that. So that's at least one thing to maybe keep an eye on and keep in mind when you're looking at some of the stock price action, because 2 million shares, if those 2 million shares really were sold, and you look at the volume that we've had, I guess maybe I should just look at the average volume. You can see the average volume is like 200,000 or 300,000 shares per day. Yeah, right now Yahoo Finance reports it at 267,000 shares, right? So that would be just all new selling for roughly, I'm just ballparking it, like 7 days worth of volume here of just strictly of lots of selling pressure on the stock. And obviously I'm assuming that wasn't all just done in 7 days, but even spread out, it's a lot of selling pressure for folks there. So just something to keep in mind, right? And that's a lot of which a pent up demand for selling the stock that really happened this quarter. All right, that I think was everything that I really saw as notable here. You can read through it. There's some other tiny tidbits, but a lot of it is repeats from prior quarters. I am a little worried that they're burning through quite a bit of cash, and that they're now, I'm looking at the Q1 results, and that they're now down to, I say down to $15 million on the books at the end of June. And so I am a little afraid that we are going to see more dilution through that equity line with B. Riley. We'll see. I think if they do a good job of timing the stock price when it's higher than $3 or $4, then maybe that's not so bad. But we'll see. Oh, one other thing I forgot. Let's see. Despite the challenges the U.S. economy faces, Q3 earnings just prior to October will be telling and give us a good idea of the performance of the company and where it could go. That's what Wakaza said. Yes, I agree. And I think a lot of it comes down to execution at this point. Execution, building the robots, and then they're going to have to sooner or later figure out how to improve their margins. But I think just getting through that backlog, right? Again, I talked about it, but that $1.9 million worth in the backlog, if they start chewing through that and just deploy those, that's going to be huge for the company. And we've seen the sales announcements and renewals that clearly the robots are providing value. Clearly there's something there, that the market likes, the customers like, right? Not the investing market, like the actual, the market that they're selling into. And sooner or later, I feel like it has to, the company has to start growing much faster than 10% per quarter. And I also have to imagine that some of this, the implied time to say that we have a backlog of 35 robots, and the implied time that means is actually taking them to produce and be able to deploy the robots, that's got to be a negative on their sales, right? When they're talking to folks and folks say, yeah, sounds interesting. I'd like to take a robot, please. And they say, oh, okay, great. Well, that might be 4 months from now. That I have to imagine that's currently a negative on their sales, right? And so if they can get to the point where they actually have robots available to deploy quickly, that might actually help accelerate sales as well. No, one thing that I just remembered I wanted to touch on real quick for the folks who really care is the amount of robots that they have available, that they term it as on lease or available, right? That's a balance sheet item. And you can see this has just been going up and up and up. And so this thing, in terms of the value of the robots, is up. Let's see if I can get the actual numbers here. It is up, $500,000 for the quarter, and that's been roughly consistent, for the past couple quarters, which tells me they haven't actually increased their rate of production. And I'm guessing most of their investments toward this have been probably on that. I guess I'm speculating it, right? I'm not sure whether they're bottleneck for why they're not producing more and fulfilling that sales backlog. I don't know if it's a matter of, limitations of actually producing them, right? The people and the facilities, and whether they need to invest in that, hire more people or get more facilities, or whether the issue here is just supply chain constraints and they can't actually get the parts. I think time will tell for that. So that's something. But another thing that I do take a look at is their amount of raw materials and the amount of robots in progress. You can see this is actually raw materials has just been going straight up for a year now. 1, 2, 3, 4 quarters in a row. That's been going up, and in fact, it's up. A year ago, it was under $600,000. Today, it's $1.7 million worth of raw materials, and I have to imagine that some of this is buying larger quantities of parts, as they've talked about, because they're required to purchase in larger batches, and some of this is actually buying ahead so that they'll have parts, even if in the future it's harder for them to get the parts due to supply chain constraints. All right, Wakaza says, also, China's economy may be on a verge of a collapse, and wondering if it would affect the U.S., causing us to reel in other words, saving cash. Yeah, that's I know a little bit, not enough to actually make any comment on that. And it's hard to say how that would affect Knightscope. But I mean, if this is, I think just the general uncertainty, right? I think what you're touching on, I'm going off in a slightly different direction. I would say that just that general uncertainty, where there is a lot of uncertainty in China. There's obviously still, a conflict going on in Ukraine, and that has major implications for, a large chunk of the world. And you in the U.S., sort of raising rates and having a number of issues that are not typical. I think you would say. I think it just creates a lot of uncertainty. And yes, to that point, like a lot of folks might be getting pretty conservative at the moment, and sort of not taking risks, and to your point, saving cash. Yeah, I think that's a great point. For more than just the China issue, I think for lots of things that are kind of coinciding right now, there's just a lot of uncertainty. And yeah, I think you're right. Yeah. Oh, great comment. Thanks for that. Yeah, but this was actually everything that I wanted to talk about. I will say, just while I'm rambling and about the wrap up here, I still do find it unsatisfying that I can't quite pinpoint what all is comprising their cost of revenue. And I have some of their components here. They do disclose how much depreciation is in that cost of revenue. They disclose how much they pay for repairs, at least insofar as they're paying Konica Minolta, which is sort of their the contractor they have that goes out and does the repairs nationwide. And they talk about a little bit of the stock-based compensation, but basically from the items that I can pick out, and even if I give some allocation for rent costs into the cost of revenue, I still don't know what happened with the vast majority of what they're terming the cost of revenue, right? Almost 68% of it, the 2/3 of it, basically, they really don't give enough transparency into that. I've actually emailed them about it. They didn't tell me anything. So I will probably bug them about that again. That's something that I would really like to see, is to have a little more insight into why do we have negative gross margins, right? Like it makes sense to me that this could be the case, but I don't have enough details here to have, like, my confidence is decreasing a little bit, right? As I see the revenue going up, but the gross margins not improving, my confidence that I have a good understanding of why those gross margins are negative is sort of decreasing. And that's, not great. Yeah. All right. That is everything I had to cover today. I don't know. I'm going to give you all just another minute. Folks on the stream, if you have something, questions or comments, before I hop off. I do appreciate y'all joining, and for anybody else who's watching this after the fact, I do these videos usually in the evenings, Eastern U.S. time, on as many evenings as I can hit, Sunday through Thursday. Some days I'm able to, some days I'm not. But so if you're ever interested, feel free to hop on during those times. Watch the channel and see when I go live, and hop on here on the live stream. All right. Well, Kaza says, right now where I live, my HOA is thinking of adding more cameras and ditch the security guards. I suggest to add a K5. Great. Are you in the Scout program? You should get in the Scout program. You get a referral bonus there. You just sign right up on the knightscope.com/scout. Harry, I'm plugging that for them. But I mean, yeah, that's it's interesting, right? It would be interesting to hear the conversation from the other side, right? From your HOA side, in terms of, like, how are they thinking about this? What concerns do they have? Or why would the robot work or not work for them? I'd be super curious to hear that. Well, Kaza says, annual meeting for me is this September to present it. Cool. That's awesome. Let me know how it goes. If you're still hop on a later stream, or you can email me. I do have my my email on my channel page. You can take a look at that there. Oh, you're not in the Scout program. I think you can just sign up, and I think if you basically give them a lead give the company a lead that ends up resulting in a sale, I think you get $1,000 is my recollection. It's been a bit since I looked into it, but if you're gonna do that anyways, you're doing some of the work, you may as well get the referral bonus that goes along with it. Not part of the Scout program, but just want to lower HOA payments. It would save us $110,000. That's substantial. Yeah, that's sounds like a cool opportunity. I'm super curious to hear how it goes. Let me know after you present it. All right. I am probably gonna hop off. Thank you both for hopping on the stream, and anybody else that I missed. I only saw comments from two folks, but I never know who's actually on here. I think that the app that the program that I use doesn't seem to do a good job. Like, I'll see people commenting, and it tells me that they're not actually joining on the stream. So I don't know. Yeah. All right. Well, again, thank you, Wakaza, for joining, and I'm gonna hop off now. So have a good one. Thanks everyone for watching.